Assalamualaikum and salam sejahtera. This video is to discuss or to show you on the tips preparing the financial statement. Means that to prepare statement of profit or loss and also statement of financial positions during your examinations, especially on what to do for the adjustment, because many of us a bit confused on how to do the adjustment. So this video will show you the easiest and the safest way to do adjustment on the financial statement. Okay, for example, you are given this kind of questions. Means that you are given the trial balance in the questions, and also you have additional information. Normally the additional information will start with closing inventory, but do not forget that the additional information can be written in such a way arranged differently from the normal or the usual way. So just look at what are the additional informations that are given. Okay, then we have the closing inventory, depreciations, accruals and prepayment, and some of the daily adjustment, and last the account receivables adjustment. During the examinations, we have a very limited time, so what would I do is to prepare the statement of profit or loss and also statement of financial positions without the adjustment. Means that you transfer all the figures, the amount that are available in the trial balance into the statement of profit or loss or statement of financial positions. For example, the sales, you will find this figure 305950 from the trial balance. So you work out or draft out the statement of profit or loss without the adjustment. You do not have to calculate the net sales or the net purchases or the gross profit or the cost of goods sold or the cost of sales. You do not need to calculate them first. Just transfer the figure from the trial balance to the statement of profit or loss and also to the statement of financial positions. I just transfer it first. Once you have transferred all the figure, then you will look into the additional information in the questions for the adjustment. Now, have a look at additional information. Closing inventory as at 31st December, that is the closing the year, the accounting year ended. 31st December 2019 is 34,500. This is the closing inventory. So you need to adjust it. Put this figure to the closing inventory in the format of statement of profit or loss and also the statement of financial positions. So the figure is 34,500, the closing inventory. So on our statement of profit or loss, the closing inventory is here. So you put 34,500. That is the figure for the closing inventory. Okay, one, you put in here the statement of profit or loss, and another one, you need to put the closing inventory in on the current asset. 34,500. Always remember, anything outside the trial balance, you need to put that figure into two different places, whether it is on the statement of profit or loss or in the statement of financial positions, but the number must have two places to be adjusted on the financial statement. Now let's look at the second adjustment or additional information that you need to do. Here is on the topic of depreciations. It says here motor vehicle depreciate using straight line method, 20% of the rate, and the equipment using reduced balance at the rate of 15% per annum. So we need to calculate this first, the motor vehicles and also the equipment. Okay, let's repeat. Motor vehicle 20% per annum using straight line method, equipment 15% per annum using reducing balance method. You do not need to look at the questions again. I mean, you don't need to look at the trial balance anymore. You just go to the answer, the one that you already done, transferring the figure from the trial balance to the statements. Just go direct to your answer. You already put the motor vehicle 25%, accumulated depreciations 5160. You already put here the value of the cost and the value of accumulated depreciations. So it says just now motor vehicle will be depreciated at cost. So this is the cost, 25,800. For straight line method, the formula is the cost multiplied with the rate. Just now we have the cost 25,800, and you need to multiply with the rate given is 20%, so 0.020. So you go to your calculator and calculate that amount, 25,800 multiplied with 20%, that is 0.20. Once you calculate it on your calculator, the answer is 5160. So this is the amount, 5160. This figure will be written in the statement of profit or loss, and also will be transferred into statement of financial positions. Both of it will be put there. So let me show you on how to write the answer, 5160. Once you already calculated that depreciation, 5160, so you need to go to the statement of profit or loss. That is 5160 is the depreciations, the expenses to the organizations, to the business. So you need to put the other expenses part. So you need to put depreciations, depreciations of motor vehicles. Having trouble with it. $5,160. So here you put other expenses, and another one you will write into the accumulated depreciations. So here already have the last year figure, 5160. So you need to add that amount, 5160, add with amount again. So your accumulated depreciations will be added with this year depreciations. So the accumulated depreciation now it's been added, becomes 10,320. So you will already put the two places on other expenses and also on the accumulated depreciation. Let's have a look for using the reducing balance method. The formula for reducing balance method is the cost deduct with the accumulated depreciations. Means that you need to calculate the carrying value first, and then you multiply with the rate. Oops. So again, do not go to the questions looking at the trial balance. You do not need to do that. You just go to the answer that you already prepared. Look at the answer. The non-current asset in the statement of financial positions, you have equipment. Here, look, equipment. You have already all the costs and you have the accumulated depreciations. Just put the figure and the cost and the accumulated depreciations and you deduct them. Okay, you already know the cost, 23,000, accumulated depreciations, and also the rate. So you just go to your calculator and calculate them. Once you calculate, you receive the figure of there is a decimal point. So normally in the exam questions, you can just rounding up them. So I will take 2795 for depreciation of equipment. 2795. So your answer 2795 would be your depreciations. Again, this figure will go to SOPL and also SOFP. Both of these statement will written this figure. Okay, go back to your answer again. You need to have depreciations of your equipment. Okay, write depreciation of equipment, then write the figure. Okay, just now is 2795. So 2795 is your depreciation for the year. You put in the statement of profit or loss other expenses. So you put here, and you need to add the accumulated depreciations. So add that figure just now, and your accumulated depreciations now change to 7165. That is how you do the adjustment for depreciations. Okay, let's have a look on the next adjustment, that for accruals and prepayment, adjusting the revenue and expenses. So tips to memorize: any accruals means something not paid yet, or something that has not been received the money yet, something not yet happened. It's already incurred, the expenses or the revenue incurred, but the money has not been transferred to us or we did not pay it yet. So look on the keyword not yet or the word outstanding, tertunggak. So those are the keyword that you will look into the sentences or in that particular exam questions. So accrual, something not yet paid, not yet received the money. So any accruals must be add up plus, and the prepayment is something that already been received, or the money has been received, or the money has overpaid, overpaid to the third party. So the prepayment, something that has been transferred, the money has been exchanged. So the prepayments must be deducted minus. So that tips for memorizing the accruals and prepayment. And the second one is expenses of accruals must be recorded in the current liability, and the prepayment of expenses must be recorded in the current asset. However, for accruals revenue must be recorded in current asset. Prepayments of revenue must be recorded in the current liability. So you need to have this table, so you will remember where to put it. Okay, tips to do the accruals and prepayment. You need to do it one by one item at a time. Please do not go all of it, because once you did not do it systematically, you will miss out one of the records. So first we look into the salaries first. Accrual salaries means that accruals, just now it says add. You need to add the salary. So just go to your answer just now. The salary, okay, salary, okay, here. This is the salary. So the salary need to add up. So you need to add, what is the amount just now? 7,000. So you need to add 7,000 here. So the salary need to be add up because it's accruals. Once you add up the salary, 7,000, so it becomes 90,330. So this is one record add up on the salary that is in the other expenses. So another one, accrued expenses. Yeah, expenses, right? So accrued expenses or accrual expenses must be recorded in the current liability because we owe the employees, other people, we delayed the payment, so we owe the employees. So you need to go to the current liability. So you need to add the accruals. You can use accrual salary or you can use accrued salary. You can copy from the questions accrual salary. So accrual salary just now 7,000. So 7,000 here in current liability, accrual salary. So there you have two places that you already record. Add the salary here, and another record is in current liability here. So You already record 2 places. Now let's have a look at another one. Investment dividend, 500 ringgit. The accruals, not yet been paid the investment dividend. Okay, now look at the answer. Find out where the investment dividend is. There you go. On the other revenues. It's a need to add because it's accrual. Accrual must be added. So you need to add 500 ringgit on the investment dividend. So add with 500, just calculate on your calculator. So then you will have 3175, your investment dividend. That's one place. So another one, accrued revenues. Just here, accrued revenues is plus sign. This is revenue. So accrued revenues must be recorded as current asset because the money is actually ours, not your receipt. So you go to current asset. Okay, go to the current asset. Now you put the accruals, investment, oops, wrong spelling, investment dividend, 500 ringgit. That is the amount that we put just now. To make sure, just look again. In the bracket, it says 500 ringgit. So the 500 ringgit must be recorded in the current asset, accrual investment dividend, 500 ringgit. Next is the advertising, 300 ringgit, again accruals. Now go to your answer. Find out where is the advertising. There. Under the other expenses. Again, just now they have 300 ringgit accruals. Again, accruals means you need to add it, to add them up. Sorry, wrong. Yes. 300 ringgit. So you need to add it. 300 ringgit for the accruals that not yet been paid to the third party. So now the advertising becomes 3,300. It's not only 3,000. Again, accruals expenses. We add expenses. Accruals expenses must be recorded in the current liability. So again, go to your current liability, accruals, advertising. The amount is 300 ringgit. There you go. Your record. Now have a look on the prepayment. Prepayment must be deducted because it's overpaid. Already paid to the other party. So prepayment deduct and must recognize whether it is current liability or current asset. So prepayment deduct. Now go to rental received. Go to your answer. Find out where your rental received. Here. Rental received on the revenue. Just now it's prepayment. Prepayment must deduct. Prepayment of 2,000 ringgit. So prepayment deduct 1,000 ringgit So you need to deduct this amount with 2,000. Okay. So it becomes 24,000. Just now 26, now 24,000. And the prepayment rental receipt becomes your current liability. Prepayment revenue, current liability. So go to current liability. If you're not sure, go to that table again. Prepayments, revenue, current liability. The current liability. So you need to add the prepayment rental receipt. Oops, sorry. The receipt, and the amount is 2,000. So you have one record here, and you adjust rental receipt here. All right, next, utilities, prepayment utilities 110. So again, go back to your answer, find out where the utilities is. Okay, here on the other expenses. So prepayment utilities, prepayment. So prepayment, prepaid must be deducted. Deduct 110. So your amount here need to be deducted with 110. So go to your calculator, punch out the number, and you will have 4,300. So you adjust here, one adjustment here, and prepayment expenses. Now let's check prepayment expenses. It becomes current asset. So your answer must be go to current asset, prepayment utilities, current asset. So put here prepayment utilities, and the amount is 110. So here one record, and another one here. Okay, next is prepayment on insurance on purchases, 750. All right, go to your answer, insurance on purchases. But insurance is usually expenses, but it's not here because insurance on purchases would be calculations of gross profit. It's here, insurance on purchases. So insurance on purchases just now, looks, I forgot, 750. Prepayment. So prepayment must be deduct. So deduct 750. So deduct here 750. So go to your calculator, type it out. So your insurance purchases no longer 1,500 but becomes 750 because you deduct. Now deduct 750. Okay, you adjust one here. Insurance on purchases is still, even though it's here recorded here, but the insurance on purchases is an expenses. So prepayment expenses. Let's have a look at the table just now. Prepayment expenses must be recorded in the current asset. So now go to answer on the current asset. prepayment insurance on purchases, 750. So one you record, you adjust here, another record here, and you already change it on the insurance on purchases here. Prepayment and expenses, prepayment or accruals, expenses and revenue can be in terms of sentences. For example, here, loan from DRB was taken on 1st July 2019. So this is in terms of sentences. Just now, it's on the table. You already know what is accruals, what is the prepayment. But here, when it says here, the loan is taken from 1st July 2019, and your accounting year end is 31st December 2019. So you actually have 6 months there. The loan has already been taken 6 months. So every loan must be paid with the interest on loan. So interest on loan is an expenses. So now look at your answer. Is there any other expenses? Is there any interest on loan? Okay, go down. There you have interest on loan, 2708. Okay, now you need to calculate whether this amount comprises all the 6-month interest for the year. Okay, you can go to the questions. The loan is given 6.5%. When it says here, it means that 6.5% is per annum for 12 months. 6.5%, and the amount is 100,000, the principal value. Now we need to calculate the interest on loan. Okay, the formula for interest on loan is PR principal multiply with the rate and multiply with the time. And the principal just now is 100,000. And you need to multiply with the rate is 6.5%. Or you can write them as 0.065. And multiply with the time. The time just now, 1st of July to December. So you can calculate using your fingers. From July to December, it's 6 months. So 6 over 12. That is the time, the period that the loan has been taken. So now you go to your calculator, calculate them. What is the amount of total interest on loan for the year? Once you have calculated on your calculator, you will have this amount, 3250. This is the total of interest on loan. But we already record in your statement of profit or loss, you already record 2708. So you actually need to add this amount to become the amount of 3250. Okay, now let's analyze. The interest on loan should be for the year. The interest on loan for the year should be 3250. But you already recorded in statement of profit or loss is 2708. So it's actually understated. You need actually to add something, to add an amount to becomes 3250, right? So what is the amount here? So you need to, again, go to your calculator and calculate them. So your calculator will show you the amount of 542. So 542 need to be added up. Again, remember the rules of accruals and prepayment. Something you add becomes accruals, right? Okay. Now go to your answer. Interest on loan need to be add up 542. Okay. From here. Add 542. So become 325. Add expenses. Accruals expenses. Again, you can go to your tables. Accrual expenses is current liability. So you need to go to your current liability records, add accruals, interest on loan. And the amount that you add is 542. Okay, that's how you do if you are given the accruals and prepayment using sentences. Now let's have a look on the other adjustment. We call it as daily adjustment. So daily adjustment is actually more or less similar to correcting an error. So correcting an error, you need to use your own the knowledge of accounting and transactions analysis, increase, decrease. So my tips that I will share with you for daily adjustment: anything that increase need to add, anything that decrease need to deduct. So let's have a look to the questions. Okay, in case Sudin, this is the owner, taken the goods to 760 for his family and not been recorded in the books. So not recorded means you need to identify what is the decrease or increase in the items in the books of this business. So taken the goods for personal use. So it means that the goods that we kept in the business, usually we will record in the purchases. So with the goods, when say the goods, so it purchases. So the goods has been taken out from the business. So decreased, right? It's reduced. So you can say that the purchases reduced. And for family use means that personal use, it becomes drawing. And the drawing has increased. So in you states that here, the drawing increase. Oops, sorry, drawing increase. And your purchases has decreased. So deduct purchases, add with the drawing. So go to your answer, purchases. Go. Purchases. So purchases here, you need to add, to deduct. Deduct. What is the amount just now? 2760. So 2760. Deduct 2760. So here you need to deduct 2760. Another one. You need to add the drawings. Okay, now go to drawings. Go. Okay, drawings. So drawing here need to be add up. Oops, again, add 2760. So your drawing will be at 2760. So your drawings will increase 4270. So that's how you adjust for daily adjustment. Now let's look at the other one. Okay, this one it says here, student, that the owner forgot to record the cash contributions. So here, cash contributions means that your cash increase, right? So your cash increase and contribution of owner, it becomes capital. So capital increase. So here we go just now, increase cash and also increase capital. So both of them will be add up with that amount, 5,000 ringgit. So go to your answer, capital increase, just now that, increase 5,000. So you need to add up your capital and the cash. We do not have cash in hand, but we have cash at bank. So it's here. So your cash at bank is need to add with 5,000 because just now it's increased. Both are increased. So again, add up 5,000. There you go. That's how you adjust the daily adjustment. The last adjustment that we need to discuss is on the allowances for doubtful debt. So this is usually the most hardest or difficult to be understood by the students. So okay, let's look into the questions. Again, you need to do one by one. Do not go jump to all the conclusions. Now, the first thing is to adjust the bankrupted customers. Means that any bad debt that already been recognized by the business. Okay. In the question, it says here, okay, one of the account receivables of bankrupt means that it cannot be paid and unable to settle their debt, 1,500 ringgit. So here, you need to adjust the account receivables. So go to the answer, go to the account receivables. Okay, account receivables need to be deducted with the bankrupt customer. So 1,500. So you need to deduct the account receivables with 1,500. So you adjust the amount of account receivables. And another one, you need to go to the draft paper. Go to your draft paper. You need to calculate the allowances for doubtful debt last year. So you can see in your answer is 2,500. So this is the last year figure. So you need to calculate 2,500 is your last year. So you need to deduct with the one already bankrupt. So you already recognize that is the customer that they cannot pay it at all. So it's already recognized as bad debt. So your allowances for doubtful debt has been reduced because you deduct 1,500 the bankrupt customer. So it becomes the allowances for doubtful debt balances now the balance only 1,000, right? Okay, so that is how you do the adjustment for the bad debt recognized for the business. Now, the next step is to calculate the new or the allowances for doubtful debt that to be carry forward to the next year. So it says here, allowances for doubtful debt to be adjusted 5% of the net accounts balances. This net. It says here net. So net means that already being deducted with any bad debt recognized for the year. So just now, if you go to your answer, you already has adjust deduct with 1,500. So this is actually the amount of net account receivable. So 5,4,100 is the net. So it says here, it's the question says that AFDD is to be adjusted at 5%. So you need to calculate. So your new AFDD should be on the 5%. 5% multiply with the net AR, and the net AR is just now we already calculate. So 5% is 0.05 multiply. So the in your answer is already been calculated 5,4,100. So 5,4,100. So you need to calculate this this new AFDD. So the new AFDD. Oops, sorry. The new AFDD amount. Go to your calculator and calculate. Your calculator will show you that you will have 2,705. The new AFDD 2,705. So now you need to identify whether the allowances for doubtful debt need to be added or to be decreased. To be increased or to be decreased. So the balance, just analyze it. The balance of AFDD just now is 1,000. And the new AFDD, just now we calculate is 2,705. So already have this information. So the balance is only 1,000. The new one is actually 2,705. You already calculate just now. So you need actually to add something. So the AFDD to be carried forward is 1,000 need to be add something amount to becomes 2,705. So what is the amount here? It's obviously is go to the calculator and calculator. So 1,000 need to be add 1,705. So it becomes 2,705. So this amount 1,705 is to be add up. So if you want to add up the allowances for doubtful debt, it becomes your expenses. If you deduct, it becomes the revenue. So now the example that's been given is to add 1,705. So it becomes expenses. So go to your answer, your statement of profit or loss answer or statement. To add becomes expenses. So go to your statement of profit or loss, the expenses. You can put the increased AFDD or you can put doubtful debt, whatever it is. So increase AFDD, and you will put 1705. Check it again. Add 1705. This one will be recorded in the other expenses. Increase AFDD, other expenses. Increase AFDD 1705. Just put here. And the another adjustment for AFDD is to change this one. The allowances for doubtful debt. Get the allowance for doubtful debt. The new figure that we calculate is 2705. So adjust here with the new amount 2705. So that's it. That's the adjustment for the allowances for doubtful debt. Recognize whether it's increase or decrease, and adjust the new allowances for doubtful debt to be put in the current asset. Okay, now then you can calculate the net realizable value of your accounts receivable. So your accounts receivable should be 51395, and after this you need to calculate everything else. For example, the carrying value of the depreciations, the cost deduct with the accumulated depreciations. The cost deduct with accumulated depreciations. Then you need to add all the carrying value of your tangible asset. Add. Then you add up all your current asset, add your owner security, current liability, and also so here goes. And calculate the net profit, calculate the gross profit, everything else. You need to continue to complete your statement of profit or loss and statement of financial positions. That's all for now. What I would share for the tips for the adjustment. Thank you for watching.